Hey, what's up, everybody? Welcome once again to Tenacious Tribe to our YouTube episodes. And I hope you guys have had a very nice trading session today. No clue how this S&P 500 performed today. Let's take a quick look at how things went off today. And yeah, we see as for starters, okay, this was a red day minus 0.84. What do we see here? What do we see? Oh yeah, okay. Weekly time frame, we see a small wedge being formed here. So be very careful what's about to happen. We're still in a bear market. There's still threats of a recession. There's already some news saying that there are good odds that the U.S. can actually avoid the recession. I trust in the charts. I trust in the price action. Be very careful with S&P 500, with stocks in general, so to say, because definitely see this S&P 500 forming here this wedge pattern. If it does break down below this upward sloping trend line, yeah, you bear in mind that there it could be another bear run such as this one falling, which as per our work should fall also, say for instance until this value zone here where buyers should step in. This once again a worst case scenario price action analysis over the past 50 years would entail that a very pessimistic scenario would mean that the stock market could actually end up plunging until this level. Just be very careful. Wait for the stock market to give you signs of reversal of recovery. I know. Of course, you are a value investor. If you are indeed a value investor, now it's time to buy because everything is at a discount. Bear in mind though that if you are a retail investor, something I like very much about price action is that if you're a retail investor, you're never gonna know as much. I mean, of course, if you read Peter Lynch and if you read what he says about your specific ad, your specific contact, direct contact with a certain kind of industry, certain specific stock or company, so to say. One might advocate that you could have an edge with that stock, that company. However, the odds are you have no means of competing against big money, against big money managers who spend 24/7, 365 days a year studying every little detail about all the companies out there, managers, uh, products, earnings, insider buying, insider selling. I mean, of course, you can always check for the fundamentals. They're readily available else everywhere. You can, of course, go through the audited cash flow statements, balance statements, income statements. Check if a company is liquid, if it's solvent, if it's profitable, all that. But I mean, I, can you really compete with all those big money managers? So I think that your advantage as a retail trader is that you can actually afford to sort of piggyback on what these big money managers are doing, and by doing so, you can focus into price action, technical analysis. With price action, technical analysis, you're not trying to ascertain if a company is directly, if a company is profitable, if it's solvent, if it has low debt, low price to debt ratio, if it owes very few money, if it is exposed, if it is over leveraged. That's not what I'm trying to ascertain with price action. With price action, what you basically do, price action analysis and technical analysis, what you're basically doing is trying to ascertain what big institutions think about a certain stock. I mean, this is the S&P 500, for instance, but look at this candle. Let's say this was a stock, or let's pick another. Let's pick the stock of the day today, by the way. Goldman Sachs, the one I brought for you today. Let's pick on this stock, for instance, on this candle, for instance, here on the week of the 6th of June, 2022. Do you really think like the retails, apart from exceptional cases such as the GME case or the MC case, do you really think that the retail traders have the money, have enough money to move the stock uh, as this stock was moved back on the week of the 6th of June 2022? Hell no, no way, no way. Retail investors have enough volume, enough capital to move such a liquid stock with so much volume, with so much share floating, with it takes a lot of money to create these trends, a lot of buying pressure, a lot of selling pressure to create these trends, to shift these uptrends from a downtrend, to shift these ranging markets and downtrends to an uptrend. It takes a lot of money. The kind of money that only big institutions have. And your edge as a trader, your edge as a retail trader, is you can actually get to look at the footprints left behind by these big money institutions, and piggyback. Of course. I mean, bear in mind that these big money managers, just like you saw Bill Ackman, for instance, with Netflix a couple of months ago, big money managers, they make mistakes. They do make mistakes. So you're always going to need risk management, position size, a proper hedge, something you can quantify, running numbers, back testing, future test, forward testing. Excuse me. But I mean, your best odds as a retail investor, aside from the, of course, from the always reliable dollar cost averaging, which I love, is to sort of specialize as a price analyst or a technical analysis, which bear no doubt in your mind that banks do have technical analysts. uh, Big money institutions do have their technical analysts. This is not anymore just a Warren Buffett sort of sort of business anymore. But as I was saying, your biggest edge as a retail investor is that you can actually get to trace what big money is doing. Like, look at this kind of. This is obviously a big money manager selling off this stock. We don't know which. It can be. There's a lot of mutual funds, hedge funds out there capable of moving these amounts of money and capital. And yeah, if you excel at ascertaining what these guys are doing, or reading in the price section or in the candles what these guys might be doing, then of course, then if you master also self-discipline, trading psychology, and risk management, you do have a chance to make money in the markets as a retail investor. Because think about it. I mean, these guys, they move so much money, they leave so much footprint. They are so limited by amount of stocks they can buy, by type of stocks they can buy, by the stocks that they have to report to their superiors that they just bought, or by the market cap of the stocks that they can buy. Think about it. If these guys are buying like a penny stock, for instance, they put like 10%, 2%, 1% of their trading capital in one penny stock, and the position or the average price at which they bought just skyrockets, and they just start losing from the outset. That's why these guys have to make these moves with more liquid, with more shares floating, bigger market cap stocks. Having this said, let's delve into the price section of the stock of the day, which I chose to bring to you guys. Goldman Sachs. I saw there was a lot of volume today around this stock. I saw it was a very popular stock today. I mean, what did I see here? What did I see? I prefer the longer time frames. They regulate my emotions. They help me to capture very big trends. I'm sort of a momentum long term trader, and yeah, you saw it. An uptrend started here on December 2020. Look at this beautiful Mozurobu candle. If you trade like I do, you'd be making sort of 34.20% here at this stock. It's very simple. You just break out from this pattern, and tracing. the stock with 200 EMA, 10 EMA on the monthly time frame, and that's very mechanical, which I like. It's better to regulate my emotions and to avoid decision fatigue. But of course, there's I mean, if you're into it, if you're into discretionary selling, look at these red candles alternating with green candles. Look at their size here. This is really like a choppy environment. These are clear signs of distribution phase. Then you see here that there was no interest on this month, and yet again you saw enormous bearish candle here, piercing below the 10 EMA on the monthly time frame. This is when the downtrend started for officially, I would say. Uh, Lower highs breached below, market structure broken, price reading below the 20 MA. This is when momentum traders, if not already, all this trade should have left the stock. And what we got now, by the way, we have a downtrend. Look at how price is respecting the 200 EMA or the 10 EMA on the monthly time frame. A lot of pace, a lot of momentum from the pairs. Red, 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 red. And it was losing pace a little bit here. You see that the smaller size of the candles indicate the lower momentum from the bears, which was picked up again here. Look at the size of this candle, for instance. Bulls stepped in here. This is a shy candle, I would say, still just like the shy candle we still have this month. Uh, what did you have today? Yeah, today we had a green day plus 251. I do not like this candle though. It went straight against resistance. Yeah, really started to see the supply area here. Bam, strong momentum downwards. Gets back into resistance and is pushed back again into demand zone. Gets back again to supply zone, and it touches supply zone. It's rejected again. I think this rejection, yeah, it's not exactly bearish. Look at this candle, for instance, uh, showing us where the bulls are stepping in. This candle here also ostensible and very distinct from the other uninteresting candles. What can we make of this? I do not usually trade on the weekly time, on the daily time frame. At least best case scenario, worst case scenario, weekly time frame. I do prefer the monthly time frame, as I said before. What I'll be doing here, I mean, you definitely see like a very strong bearish candle here. I will not be comfortable trading GS unless there was a breakout from this supply zone here. I do see, however, some signs of divergence on the RSI, which tells me that there is the possibility that this downtrend has come to an end. This is not exactly an uptrend on our RSI, but you do see that the price is trending down. Where is the RSI? It's not sloping as much down. I think it's even like slightly sloping upwards. Let's see how does it score. 32.55, 31.84. Yeah, still in a downtrend. I mean, but not as pronounced as the price you see here. And then you see it lifting off to uptrend RSI. Slight divergence, not too big. Slight divergence, not enough to force us into conclude that there's going to be a reversal here. Not enough bullish signs here. Daily time frame sounds promising, but do not forget that the price is still trading below the 200 the 200 EMA, which is the 50 EMA, excuse me, which is 10 EMA on the weekly time frame, and yeah, and also trading below 200 EMA, which is the 10 EMA on the monthly time frame. So this is now as a momentum trader, of course, you might have your strategy, you might have your way of doing things, you might have your edge, you might have your favorite setup. But as a momentum trader, I'm never gonna trade. I'm never gonna buy any stock or asset which is trading below both the 50 and the 200 EMA on a daily time frame. Not when I see this bearish candle here, regardless of the small bullish I'm just starting to see here. What could I make of this setup? I mean, I don't like the short stocks, as you might be aware of it already. I do not think that these sort of moves offer good the risk to reward ratios. You cannot make more than 100% on a short trade, but you can make virtually limited return on a long trend, and you can also like lose virtually a limited amount of money in a short trend. It's always a leverage trade. If your broker does allow you to short a stock, you have to pay him daily or weekly or monthly an interest, which I don't like. Also, especially nowadays where you got a lot of platforms which offer free of commission trades on the long side as long as you don't leverage. I would say, I mean, I'm getting contradictory signs with GS. On the day time frame, I do see a little bit of bullish signs. On the weekly, bearish, mainly bearish. Supply demand here, bum bum bum. On the monthly time frame, I'm getting also stock trading below the 20 MA, very thin bullish candles, very thin in comparison with the bearish candles that we've been seeing. The bears are still very dominant in this market. I see it. Of course, it can reverse, and it should at a certain stage, especially with GS, which is regarded as a blue chip, is it? And it should reverse anytime soon. I just don't have any substantial clues yet that that moment is about to happen or should. I definitely need a lot more clues, a lot more information from this market. As a retail trader, unless I'm very experienced, unless I'm very seasoned, unless have a strategy who set up this pop up by GS, and my numbers have been run and back tested, I would definitely not trade this stock here, Goldman Sachs. Perhaps, perhaps let's see. This could be upcoming support. Perhaps if I see something like this, perhaps if I see, perhaps if I see something of this sort, I would trade it. Say on the long side yet again. I do not like bearish. Ranging breaks out this sloping downwards trend line, ranges, and then boom, breaks above this area in strong volume and big momentum candle. Then I might consider buying it. That's a long way to go still. She still has to range, accumulate, and go through the whole phase and break out and trend upwards. So not something I'm gonna be touching over the next couple of months. That's it for today's guys. I hope this sort of exercise was helpful for you guys. I hope the information provided was helpful. I hope we can make something of this. Please recall that this is not financial advice. Please recall that trading is risky. Manage risk all the time. This is a paramount rule. Manage risk. Manage risk. Manage risk. Manage risk. Position side. Trade small. Trade small. Don't overtrade. Reduce your portfolio risk. And manage risk and manage risk. It will never be repeated often enough. That was it, guys. Hope you guys have enjoyed it. I'll be if you did enjoy it, drop me a comment. I always like to interact with you guys, learn with you guys, like, subscribe, and all that. And I'll be doing here what I like to do the most. And cheers. Have a nice week for everybody out there.